Hi everyone, it's Stuart here. I hope you can hear me loud and clear. I've just switched my headset on, so I'm not. Let me just check that that is actually working. Can you hear me loud and clear? Testing, testing. Yes, it looks actually okay. I think I'm going mad in my old age, but anyway, I hope you're all well. We've got the Bank of England expected to cut rates in a little over 15 minutes. The decision has actually been, the announcement, I should say, has been delayed by 2 minutes in respect for Victory in Europe Day, VE Day, here on the 8th of May. We go back 80 years to 1945, and the official surrender by the Nazis was declared on this day, or announces at 12 o'clock London time on this day 80 years ago. So quite symbolic day and quite significant day, obviously. And I don't want to compare trading to war, but you know, some of the sort of great leaders, great war leaders, you know, some of their sentiments we can take into our trading daily day as well. So you know, obviously be prepared. You know, it's all about winning the ultimate, losing a few battles and winning the ultimate conflict. So obviously we can look at some of the great generals, some of the great leaders over history for that as well. But 12 o'clock or 12:02 London time is when the announcement is due. 25 basis points cut. Obviously, yesterday we had Mr. Powell, the chair Powell, at his press conference talking about elevated uncertainty, depressed demand, this idea of what did he say? He said, what's the key phrase he used with this hawkishness yesterday? But you know, we were looking at indecision, risk, moving forward. The phrase he used it about 10 or 12 times. Wait and see, many times in his output. So again, they're waiting for the data. The data, will it catch up with this negative sentiment? Who can tell? Really, and really, as far as the markets are concerned, if we look at the Nasdaq this morning, we're elevated. We're up this morning. Here, I actually placed this on my little demo account here this morning. This long position here on the Nasdaq. Markets have raised on expectations of some sort of well, both the UK and US government have announcements later on. Trump will announce at 1400 GMT in a couple of hours' time. This what he's called this morning in his Truth Social, a full and serious trade deal. Many were thinking it might be just on the periphery. Remember, the UK has virtual sort of in balance with the US, so they've on minimum 10% tariff UK exports to the US. Obviously, except autos and steel and those other issues. So Trump has said this morning it's a full and serious trade deal with the UK. So whether there's been some amelioration of the tariffs for UK exports, particularly, I mean, big pharmaceutical companies export lots to the US, cars and parts, Land Rover, Jaguar Land Rover. Big exporter to the US, 100,000 plus vehicles sold last year. I mean, it's not massive, but it's still significant. So, US UK trade in goods is virtually in balance. You know, the big sector is the services sector. You know, 70% of US and UK trade is in services, financial services in particular. So that's outside of these goods. Outside these goods tariffs, but again, it's going to be quite symbolic, as you know, when we talk about the manufacturing PMIs. Remember, the manufacturing data, the New York Empire State, the Philly Fed Manufacturing Index. It's all very symbolic, and none more so than this current president. So we'll see how he plays this later on. See how Sir Keir Starmer in the UK plays this as well. Obviously, politically very different characters, different sides of the political spectrum, but both wanted to try and gain as much leverage out of this announcement this afternoon as each other, obviously. So whether this actually is a blueprint for other trade deals to come. Obviously, the UK and the US have been speaking for a long time, going back to Prime Minister Johnson's disastrous 3 years in London when in Trump's first term. So, yeah, as ever, detail is all about. The devil is always in the detail. Trump's not a big detail guy. He likes the big headlines. Starmer's a detailed guy, but he likes obviously likes the big headlines as well. But like we saw earlier in the week with Carney standing up to Trump and becoming the 51st state. He's a detailed guy as well, being a former banker from Canada as well. So let's see what this looks like. The stock markets, I say, are up on that. If we look at the UK stock market also. So it's a 10-minute time frame. Why did it went to a 10-minute frame? I don't know. We were down this morning, and then we've bounced as the cash session has opened here. We're down at an immediate start of the cash session. We're bounced back up a bit. So we're at 8,600 at the moment, ahead of the what is expected to be a rate cut from the Bank of England. Interesting for me, the detail again will be if this vote, here you can see here on the Forex Factory, you can see that if this vote is expected to be a unified MPC, as I've said many times before, there's some significant dissenters potentially. We'll see. There's chatter that some may go for a big jumbo or want a jumbo 50 basis point cut from the Bank of England. Andrew Bailey has said, he's happy obviously to have dissenters. That's the whole point of discussions, especially around economic sentiment. But as you can see here, hopefully you can see here over on this left-hand side of the screen here, the Bank of England cut today. Take this 25 basis point, take this central rate down to 4.25. That leaves the US marooned at the top of the table. It's with its interest rate. So that'll add to the comments. Presumably, Trump will have something to say about that as well at his press conference around the after the Bank of England have what is likely to be a rate cut. And so we could have quite a disparity between what Fed was saying last night about wait and see. Apparently said it about 12 or 13 times in the statement and also in the press conference. So we could have some sort of dovishness from the Bank of England. Last time, the key phrase from the Bank of England, like many of the central banks, was this gradual and careful maneuvering. So if the word gradual or careful is withdrawn from the statement that's coming out, we could see a potential another potential cut again in the next meeting in June. So it's this meeting. So it's the first time in a long time that the Bank of England would have moved twice. Let's see what happens in 5 or 6 minutes time, and let's not get too far ahead of ourselves, but we shall see, because obviously lowering oil prices, that's disinflationary as far as the Bank of England is concerned. They've talked about a reduced demand in the UK, feeding through to therefore lower expectations for inflation in the UK, but it has remained sticky as it has in most parts of the world, but it has come down as well. So again, devil is always in the detail as ever. So if we have a quick look at where we are in the market other than the stock market, so this is the FTSE that's come up. We've seen the S&P moving higher this morning in the hourly chart. The Dow also following the Nasdaq higher as well this morning. Across the while we're on the indexes, across the English Channel in Germany, the DAX is also higher this morning, cooling a bit in this current hour, but we'll see how that impacts European stocks, the decision from the Bank of England. Dollar, sorry, that's the wrong set. Majors, The dollar was up significantly against the yen this morning, in particular. So yeah, it's got it's bit between its teeth, and it's breached this 200-hour moving average. They're at 144.75 dollar yen. Euro trades at 112.88. So we're under the 113 level. So we continue to decline following Powell's announcement yesterday. We had a move down into this the 113, under the 113 area, and then we've moved into the 220-hour moving average this morning. That held, and then we continue to decline this morning under 113. We're currently trading at 112.88, below that level from the 6th of May, and this cluster down here at the beginning of May. So the May low at 112.66. Sorry, all my lines have been taken off, so I'll just put this. That's our low for the month. Obviously, we're only in first couple of weeks of the month, but that's our low for the month. 112.65 is the next downside target for the euro. So the dollar receiving some sort of bid this morning. Sterling has had a lift, and then it's declined. So our daily 4-hour trend line here, you can see up here from this top at the end of April, has been tested again yesterday as we rallied up, and we're moving down again today. So here on, you see on the 4-hour, big next level is that 132.42 zone. Now you can see that there. So dollars ticking up this morning on this trade deal. Dollar yen, which was looking to go, we were looking to take this short yesterday. So obviously which it didn't trigger here. I was looking to go short. It's actually closed positively yesterday, and that's up. Dollar CAD 138.75. So the dollar coming back against the CAD to an extent as well, but it needs to break this 139 level here on an end of day base to take this consolidation zone down here back to the upside. So dollars come back a wee bit against the Aussie. The Aussie still lifted, and it was lifted on the expectation of this chatter in the trade deal with the UK, but it's sunk yesterday quite significantly, rejecting this move to the 65 level, and we're under. We're still holding .64, but the upside move on the Aussie is still in place until we break this 20-day moving average. Now sits at .63.80 under the key .64 area. So quite a significant down day for the Australian dollar, a positive day for the Aussie, for the dollar, US dollar itself yesterday, and we were up and then we're back down again this morning. So dollar a bit on the front foot ahead of this trade announcement and the Bank of England. So let's just go back to sterling, and we look down to the let's have a look at how it's reacting to the data. So the announcement that the trade is going to be full and comprehensive. Trump's also just tweeted in the last half an hour or so as well. Too late, Jerome Powell is a fool. So it's as we thought he would have something to say. Indeed, he has in early doors US time. So sterling 132.65 ahead of this expected 25 basis point cut, and also the rate, the split on the vote, the split on the MPC will be very interesting. That's what I'm looking for. But we'll talk about, and Andrew Bailey will also emphasize later on in the week. He's not got an actual press conference today, but will emphasize, I'm sure, about this temporary, or what he sees as a temporary nature of the spike in any inflation. But a depressed, deflationary state, set of data that could lead through because of the depressed demand. So just split news about inflation. So the ECB, Bank of England, cutting, Powell and the Fed just waiting and seeing. Waiting on the data because the data remains quite high. So as expected, we've got this 25 basis points cut. The split on the vote will be quite interesting to see how that's actually coming through. That's still not, it was expected to be unified. They haven't had a unified vote for a while on the MPC, but that's not come through straight away. So that's suggesting that maybe a bit of a wait and see as well. Let's have a quick look. Bank rate votes 8-1 as expected. So it is an 8-1. So we have got one dissenter looking for more than the 25 basis point, but that's not a surprise. Gradual and careful approach to further withdrawal and monetary restraint remains as appropriate. So they've left gradual and careful. That's the phrase I was talking about earlier. So looks like they've left gradual and careful in the statement. I can't actually see that one. It's just no, there's nothing. My feed is a bit late on that, so statements to follow. So 7.2. So that is not actually. There we go. That isn't what I've just read on another feed. So the vote was 7.2 versus the 9.0 that was expected, and the 8.1 last time. So two members are looking to increase the rate by 50 basis points. I think is what that's suggesting. So well, maybe two might have gone for the full 50, or in some fact somebody might have gone for a 1. I can't yet see that data coming through here. Let me see if my Twitter feed is any quicker. No, it's just I've got nothing there. So let me just wait for my update of the statement. Let me find a statement. I can't get to the Bank of England website for some reason. It's not letting me open that. But let's have a look at the reaction on the markets. So initial reaction, well, before the data, before the announcement, we were down. Sterling's moved higher to 133.15 on the statement. That's the expectation that the gradual and careful is still in there. So that hasn't dropped out at all. Let me just rewind that. Okay, needs to stick to gradual and careful approach. So Bailey's kept that gradual and careful approach in. Stocks have come down. Sterling's moved up. 30-year yields, 10-year yields in the UK have moved up, as you might expect. There was expected to be a bit more dovishness. That isn't the case. They're actually a bit more well, certainly not as dovish as many were expecting. 10-year yield is 4.491 now, so less dovish than expected. I think it would be the case, not as hawkish as perhaps the US we're talking about. Inflation, the data's starting to filter through now. Inflation at 1.19%, 1.9% by the second quarter of 2027, 1.9% in second quarter 2028. So obviously that's a longer outlook. So certainly split 3 ways over interest rate. This is a key number again. So this tradition of the split in the Bank of England. Let me just update our panel. You see what it explains it better. It's a bit better than the Forex Factory one. You'll see that this some wanted to stay, some wanted, many wanted to obviously looks like move. So 8 agreed with the to vote of unchanged, and May 2 wanted to hang on to a change, or 2 with a cut. 7 for this 25 basis point cut. 1 didn't want to at all. So interesting split on the Bank of England again. It'll be interesting to see who the characters are, because there was some chatter that Ramsden, who's the deputy chair, they're normally both the deputy chairs and the chair are normally in alignment, but there was some dissent from the deputy chair. Ramsden was potentially, there's a new guy on the bank of the MPC as well. He was expected to perhaps talk for a bumper rate cut. I'm not sure if that's actually happened, but let me just check my news feed. Let me get to the statement. I got through the statement now. Yeah. So to progress on disinflation over the progress has allowed the bank to withdraw gradually, but bank is still in restrictive territory to complete squeeze on persistent inflationary pressures. Progress on disinflation domestic price floor is generally continuing. Decision to cut the bank rates reflects continued progress in disinflation. So it's talking about this weak demand, but elevated uncertainty. So feeding through to potential lower inflation. A gradual and careful approach to further withdrawal of monetary policy restraint remains appropriate. So they're still talking about gradual and careful, like I said a minute ago earlier. So there's no idea that was taken out, so it would mean they could jump to a cut in June, as I said it before the statement came out. So that has been kicked into the long grass from the sounds of things. Monetary policy we need to continue to remain restrictive for sufficient longer till the risks to inflation remain returning to substantially to the 2% target in the medium term have dissipated further. Okay, so in the medium term, that goes beyond the numbers that we're talking about. That's 1.9% by 2027 and 1.9% by 2029. So it's this immediate term where we were still next year, 2026, still at that 2% level, so or above that 2% level. So hence that rally we've seen in the in sterling. There we go. This big pick up in sterling. So the fact that the gradual and careful phrase has stayed in the statement. Many were expecting that to disappear. We've continued to move higher on that. So from a initial spike lower to 132.40, we're now trading at 133.14. So it's quite a significant move lower and then a significant move higher by some 40 pips there. But that's our end of 5-minute low of the day is 132.62, and the low of the day at 132.41, unlikely to be tested again as the data comes out. Who knows? We could have seen a big surprise in the trade deal, and also a big surprise in the employment numbers out of the US later on. But at the moment, that's our daily low for let's put that in for cable for sterling. But that's it's a positive. Oh, sorry. Well, that's a positive break. So that's a bid price with the probably stop loss right about this 200 period here on this 5-minute chart. So stop loss at 133.019, and we're long on this immediate 5-minute candle to the upside there at 133.09 as well. So see how that continues to hold. If you're a bit more conservative, you could have your stop loss down here. The previous this previous level we'd tested to before the data came out, 132.94. But yeah, sterling's moving up on that number. Euro wouldn't have really moved. No, Euro's moved up so a tad as well. Aussie was the other big mover. That's also back up, and then the yen was the weakest against the dollar. That's come back, so the dollar's come back down again. So there's a bit of a selling on the dollar on that Bank of England announcement. But stocks are still in the still holding their gains. Let's have a look at the what the futures market looks like. So Nasdaq actually it's continued to unwind a wee bit, hasn't it? So we pitched here, we got here before the data, 21 or 20, yeah, another daily high. We've come down a tad on that. So the dollar's ticked up a tad in the last 5 minutes from the Bank of England announcement, and stocks have cooled a wee bit. In the UK, as sterling's improved, you would expect stocks to weaken, and that's what's happened now, although we've bounced in the last 10 minutes from the move down from the actual announcement at 12:02. Elsewhere today, let's just dip out of the sterling at the minute and see, we'll come back to some of the sterling crosses in a minute. Crypto's had a very strong day. I'm sure you're aware if you're a crypto follower, Bitcoin follower. Where's my Bitcoin gone? There we are. As I've been saying for a while, quite a long time, it was positive. This big 3-candle break, this 3 white soldiers we'd had here at the end of April, as we breached the key 92, or got back into the 92,000, 96,000 channel again, and breached and held it. It's a key fib level at 50 fib, having burst through the 38.2 fib. So that's moved, and then we rallied to test the key, the more important 61.8 last week, and then we'd actually cooled a wee bit, but we cooled into 94,000. The 92,000 level held nicely this week. Yesterday we had our breakthrough again for the 5th time in 7 days. We were holding our testing and trading over the key 96,000 level and the 61.8 fib, and then today, as gold has continued to unwind, it seems to be a definite correlation between the rally in Bitcoin today and the declining gold yesterday. So you can see a 3-day rally from 94,000 for Bitcoin as feeding through, and it looks somewhat inevitable that we'll get to test the 100,000 at some point. But again, there might be some sell orders up there at the 100,000 level. There'll be equally some buy orders as well if we breach and hold the 100,000 level for Bitcoin. Once again, we haven't actually been trading over the 100,000. That was a spike on the 7th of February. It was all back to the inauguration day, wasn't it? At the end of January, we went to 109,000. So is this move up sustainable? We shall see, but certainly it's been above its 20-day moving average, which now sits at 94,400 for all of this while this nice consolidation we had here back at 84,000. So we've had a really good rally that's been sustained, and then we consolidate, and then we and up we go again. So Bitcoin very much bid. Conversely, gold has continued to unwind today from yesterday's down day, having had 2 strong up days. Big support there, as we saw at the 20-day moving average. Looked very positive here. Just on Tuesday, reversed yesterday quite significantly, having pushed to new sort of 5-day, 7 highs here. But again, you can see the top came where it had on an end of day basis and the previous rally to new all-time highs, intraday highs, where we tested 3,500 and we stalled at 3,445 once again. So down day yesterday, down again today currently, but we're back off lows at the moment. I forgot the hourly chart today. We're back off lows at the moment. So there's our 3325 zone. That's 3328 this morning, and we've been as low as 3321. So 3325 is the next 5 number to the upside. So gold weak again today, but not as weak as we'd had yesterday. Very significant candle at the end of day yesterday here at our 2300 hour candle here on this chart. So gold moving to the downside. Oil is actually looking a bit, it's got a bit of life to it again. I was looking to take this potentially long last night or today. We'll see how that finishes, but still remains obviously a bit weak, under $60. We're at 59.15 this morning. We had a good day yesterday, lifting through the 50-day moving average. Target to the upside would be 59.40. That's obviously here on the intraday time frame. That's obviously significantly below the $60 a barrel. If you go to the daily time frame, you can see it's still consolidating at lows, basically. That spike on Monday over the following the weekend announcement from OPEC of increased production has been bought up basically. So we're back up, but we do need to get over $60 if we're going to move higher. So $59 we trade at the moment. 20-day moving average sits $1 higher at $61. So little to tell whether this is actually going to be a move through a nice break of this. Again, you see the moving average here still aligned to the downside very much so, and even the 5 and the 9 here, the orange and the green lines here are just flattening out after this spike lower. But certainly there was buys at $55 and $58 this line here, the purple line here, but we rallied off that today, and we've ran into it and found support on it yesterday. So up for today. It's too early to tell whether we're going to move forward, but certainly that's, different ways of reading it. Lower oil prices is disinflationary, should feed through to lower petrol price and gasoline price in the US. That's what the president will be banging on about, and putting pressure on not to cut rates from the Fed's point of view, but higher inflation from the tariffs potentially. There's a policy argument about that, whether that's actually going to happen. Is it going to follow the sentiment data? As the sentiment data got over moribund, we'll see. And therefore, the Fed should be cutting rates, as the president has just tweeted, or truth socialed, do we call it now? I think that's what we call it. So Bank of England, let's just go back to the Bank of England. Careful, gradual is still in there. Votes from Mann and Pill were surprised. That is a lead to a knee-jerk jump in sterling. All right, so it was Mann and that's interesting. Before the decision, in terms of communique, there isn't much change to the statement whatsoever. The Bank of England maintains that they will continue a gradual and careful approach. Yeah, that's the key one that they wrote in March. So March was a repeat of February, and the focus and attention was placed on voting intention back then. Catherine Mann voted for 50 base points, true, yeah, and surprised marks with the reaction centering on that this time around. It's the same with Mann, voting to keep rates unchanged instead, alongside Hugh Bill. So Catherine Mann and Pill, Pill being the relative hawk and chief economist on the Bank of England, didn't want to cut rates. They've kept it. They've wanted it the same. So there wasn't a jumbo cut. So 25 basis points was the. Oh, this it was. Yeah, Taylor and Deringer voted to cut by 50 basis points. Mann and Phil voted to keep the bank rate unchanged at 4.5%. So three-way split. So a three-way split, which is will cause the spike in inflation. It's not clear from the data there. So the details. We were expecting a 7-2 announcement. Sorry, we were expecting a 9-0 announcement here. You can see this really vertically, but it was in fact 7-2. So two wanted a bigger. Two wanted the no change. So Pill indeed was remaining hawkish side, along with Catherine Mann, and it was Taylor, the new guy, and Mr. Ringer wanting to a jumbo 50 basis points cut. The consensus was 25 basis points. There were 7 of them voting for that, so that's what went through. So again, we have this quite heated is the wrong word, but quite a interesting mix of opinions on the MPC, and interesting that the Hawks was the other way around. So so 25 bases it is. So Bailey navigating to keep his panel together, and there's a letter here, as you say, gets published about half an hour after the announcement. There's no press conference today from the Bank of England, so we'll see if that rally in sterling continues. So let's have a look, flick back to the sterling crosses. I'll just put in the sterling pairs here. Biggest two major ones. Euro pound at 84.80, so it's continuing to decline under the key 85. So sterling up against the euro, and it's pushing for a what's that? It's a 20-day low. A euro pound. We've spiked lower on Tuesday to 84.64, but that's continuing to. Looks like that's going to unwind, test the 50 period here at 84.53. The guppy, the Widowmaker guppy, 192.79. It's been in a nice sort of uptrend. It rolled over end of last week, beginning of this week. It's had a positive day yesterday from 190 support, 190.50 sort of support area, and we're currently at 192.80, back over the 200-day moving average. So that trend is still supported. We need to, breach these recent highs here at 192 or 193 to continue this move up and potentially test the 195 area again. To the upside if this rally is continuing, but certainly yen's weak today, as we saw against the dollar, and sterling is on the front foot, so that's a good day for guppy bulls today. Against the Aussie, it's 207.60. Again, another strong day from the big move down we had last week. Similarly with the Kiwi, very much in demand. The Kiwi moved down last week and we've bounced yesterday and today. Next resistance to that 50-day moving average at 225.05. So sterling on the front foot today, on the split from the Bank of England MPC, and you see here here on the daily time frame, so a little wedge forming there with our support there at the 20-day moving average at 132.50, or just under 132.50, 132.46, and this looks like that needs to move over this little trend line here from the 4-hour and the 1-hour and the daily if we're going to move any higher. So some bid coming back potentially to the dollar in this pair. We are have been moving up quite significantly since February, but see what the details of the trade deal. We probably won't get a lot of details in the press conference, certainly, but we'll certainly see it be interesting comments from the president. I'm sure you might have something to say about the difference between the Bank of England and the Fed over the last couple of days, and the trade deal being full and serious is what he's called it. So there we go. So uncertainty really, which is what the elevated uncertainty that the Fed talked about yesterday, has really just sort of touched on. Didn't really in the Bank of England statement, didn't really focus on that at all, but it's enough to lift sterling this morning. So in summary, Bank of England has cut rates as expected by 25 basis points to 4.25. If we go back to the Forex calendar, that's updated itself. I don't think it has it? No, it won't do it quickly. Now there we are. So there we are. The Fed sitting top of the central bank rates for the 8 major currencies. Interesting, and as I say, I'm sure the president will have something to say about that. The key takeaway from the Bank of England was that the dovishness that was expected didn't come. They kept the guidance as gradual and careful, data dependent. Risks are increasing still, obviously, and this expectation of lower inflation in the medium term is what they're looking for, but they're still looking to move things in a gradual and careful state rather than having to move because of the impact of the tariffs significantly. Obviously, the UK is a bit of an outlier, given that we got the UK-US has this balanced trade in goods, huge amount of services exchanged between the two countries as well. Bailey is speaking. I don't think he was. I don't think he had a press conference today. All right, so this has just been added to hold a press conference on the Money MPC. So this is the markets. What really like this is seems a bit of a knee-jerk reaction to Bailey speaking. So that might have actually stuffed. Oh, it depends how they want to take it. But look at. It was added about 20 minutes ago. Now it's still held up. So there we go. It's ran to its 10-minute 200 period. 5 minutes what we were looking at. We just burst through that, and we're holding it still. First down candle, so you may want to take some profit on that. But next upside will be there 33.55, or through here 33.44 to the next upside level. So there is going to be a press conference. I don't know, to possibly to explain the three-way split on the board, which is fair enough actually, because that's quite a disparate for 9 people, 9 economists, to have these the 3 little silos is interesting. We got 2 that didn't want to move. We got 2 that wanted a 50 basis point cut, and we ended up with a 25 basis point cut. So obviously quite an interesting board meeting. So again, the minutes certainly for the MPC will be quite interesting to read when they come out as well. They're used to come out 2 weeks later, but they've pulled it forward now. I don't know if they're I don't know if that's going to be in there. I don't know. Okay, so we're going to wrap this up now. I'm going to go and watch what Andrew Bailey's got to say, and report back to you later. Obviously, the next big news is in another hour. We've got unemployment claims, so that's going to be skated over unless it's a real positive number. I'm sure the president again will have something to say, and it's all eyes for 3 o'clock GMT. Sorry, 3 o'clock my time. It's 3 o'clock London time. 1400 2 o'clock PM. Where's he gone? UTC GMT time. So it's 3 o'clock London time, 2 o'clock GMT UTC time. The president speaks. So take care, everyone. Have a great day. Remember, we've got, if you're not with us, as I say every day, why not? The current challenges are still, as competitive as any other prop firm out there. Do come and give us a go. If you're new to us, SC25 still works, and it gets you a 25% discount off the what is already very competitively priced challenges. So $345 will get you a $50,000 account. You get $86 off that. It brings to $250. If you only got $100 to play with, try the $25,000 account. It comes in at $131 with the SC25 coupon, and you've got a big leverage, you've got a big equity to play with $25,000. So as long as you trade in a consistent and sensible way, you're not risking too much. Somebody was asking about high frequency trading. You do as many trades as you want. There's no restriction on that. Keep into the get your 8% and then 5% in the second stage, and then you move on to a real funded account where you can get up to 90% of your winnings paid to you directly 5 days after you open the funded account, and every Friday thereafter. There's no messing about. I say 80% is standard, 90% comes with our pro accounts. So give it a go, guys, and I will see you tomorrow, Thursday. We are talking tomorrow about tomorrow is our psychology, our trading psychology webinar, which follows on from our risk management and money management webinar we did last Friday. So Fridays, mark your calendar. It's one of my I think the most significant 3 topics for any successful trader is risk management, money management, and trading psychology, because it's the emotions that tend to get in the way when we're trading, especially in these shorter time frames. But more on that tomorrow. So take care. I will see you all then. In the meantime, have a great rest of your Thursday, and may the pips be with you, my friends. All the very best. Bye bye.